Okay, guys, welcome back to our channel. Today we have Tony Cimino with Rock Financial. He's here. He's going to answer all of these financial questions for you and show you how to get the bag.
Thank you so much for the intro, Gloria. I'm more than excited to be on with you and Marvin today.
Thank you. Thank you.
So jumping into this, Tony, I got a question. What is alternative lending?
That's probably the best place for us to start, honestly. Just really quick, Rock Financial is a broker in the alternative funding space. So what does that actually mean? Well, that means you have to really define traditional first to understand what is alternative, right? And when I say traditional lending, I'm talking about the big banks and local banks and credit unions that are in your area, right? The Chases, the Wells Fargos, or Bank of America that kind of come to mind. When you start to think about what's available to small businesses, especially in today's market, it's not just the products that those places offer. There's online lenders, there's other products out there that have specific lenders that only offer those products. So Rock Financial, what we do is we have relationships with all of these different banks, lenders, online lenders, some private money. And basically what we do is we understand what do they do, right? And we work with over about 75 different banks and lenders. And basically that gives us access to a ton of different options for small business owners, right? So some things that are like traditional financing are like our revolving line of credit or term loan. They're offered in the bank. You can go get one of those products from the bank. You can also get equipment financing or an SBA loan at the bank. We offer those products too, just from lenders that aren't on your local corner, right? So, they might target a specific industry or a specific type of credit profile. And that's what makes us unique is we don't have any industry restrictions, and credit score isn't going to make or break what we're able to do for you. Basically, all of our products are based on the fact that you have a business, that business generates revenue. And as long as that revenue can support the payback of a loan or line, we can get you options on that. And that's the service that we provide is we help business owners go from application to approval and ultimately understanding those approvals and taking it from approval to funding, getting them the best product that fits their needs.
Okay,
Nice.
great. I just have a quick question for you. What type of businesses can you fund? And do you fund like cannabis businesses?
So yeah, we can fund any industry, from doctors and dentists to the transportation industry, restaurants, retail, wholesale distribution, and manufacturing. Those are some of our core industries. Even auto repair is a good one. And then, yeah, we can even, fund some of the fringe industries or some of these, newer industries that are out there, cannabis being one of them. We have a good amount of experience helping people in and around the cannabis industry, whether you're on the farming and cultivation side or the retail side or even some of the transportation that happens. We got a lot of experience doing term loans, lines of credit, equipment financing. Those are kind of like our big three products. We also offer some, commercial real estate stuff and some asset-based lines of credit and factoring stuff that will service other needs for businesses, but those don't really go with the cannabis industry too much. As far as the cannabis industry directly, it's kind of those big three products I mentioned: term loans, lines of credit, and equipment financing.
Okay.
So I know a lot of our audience is going to want to know, is there a minimum credit score?
So that's kind of a trick question. And the reason that I say that is because it's a yes and no answer. If we take a really, really direct approach, there are a handful of our lenders, a couple that don't even look at your credit profile at all. So technically, your personal credit score doesn't matter. They don't even pull your personal credit. They're going to look more specifically into the business there, and cost might be a little bit more because they're not looking at your personal credit and it's not personally guaranteed. But there are then other options that will look at your personal credit and then won't report to it. And what I mean by that is none of the products on our platform, when you do a credit check, are you going to see these loans or lines on your personal credit. What you might see is an inquiry here or there, and that's even sparingly these days. Like, only time you'd see an inquiry is like an SBA loan or some equipment financing. But as far as like a true unsecured term loan or line of credit, all of those lenders are a soft pull on your personal credit, and that's because they don't want to alert the other brokers and lenders out there that they're pulling your credit. Because, we all know it. We're in the information age. Everybody's buying information today. I'm sure the people in your network that own businesses are getting phone call after phone call and promise after promise, and probably emails and, checks in the mail and credit cards that say you've been pre-approved, right? How do you sift through that? Well, I think the first thing you have to do is take a look at who is that company. Who are they? What's their reputation? What's their background? How long have they been doing it? And does it make sense for you to work with them? Right. I know if you take a look at our background or some of our reviews, right, it's going to be people that have really worked with us. We have thousands of reviews. We've done this for a really long time. And what we do is we're the I don't want to call it the middleman, but that's what we are. We're in between you and the lender. So we help tell the lender your story in the way that they want to hear it. And then we tell the lender the lender's story in a way that you can understand it. Right. Because business owners make a living making decisions. Right. That's what they do. They're decision makers. That's why they're in the seat that they're in. So we just help them get the information that they need to make that decision. We're never going to tell you, hey, take this and this is what you need to do. That's not us. What we do is we give you options and we say, hey, how much do you need and how quickly do you need it? That's the approach that we take. And, based on the answer to those two questions, we'll get you aligned with some options. If they work for your business, great. If not, it's all good. We're going to be here in 90 days or 6 months when you want to ask this question again. And we know money's not an if, it's a when. So, when you need it, we hope you think of us.
I just have a quick question. So, we have a lot of, clients that have startup businesses.
Okay.
Do you guys get money for startup business? Do you help them get funding as well? Or you have to be an established business in order to get funding?
So startups are the toughest way to get funding for your business. I always like to put that out there. This is not the path of least resistance, right?
Right.
We're actually doing a webinar soon on how to get large funding in your business. And basically, we're talking $1 million, $500,000, $5 million. When you want a lot of money in your business, what's one of the requirements? Well, one of the things that we're going to talk about is just being around. Businesses that get a lot of money, been around 5 years, 10 years, some 2 years. Yeah, but that's still longer than 2-3 months. Right. So,
right.
I think the first thing you got to do is define that term startup. Right. If you go to a traditional lender, and I always try to provide this insight, if you go to a traditional lender and you have less than 2 to 3 profitable tax returns, they're going to look at you as more of a startup type of business. So if you've been in business for 2 or 3 years, like that's when a traditional lender is going to start to look at you as established. So that's the first thing, is looking at it in that idea, right? Because again, where we are as a society, you say startup, people think of Shark Tank, right? And Mark Cuban and Barbara Corcoran, and they're going to go pitch their idea, or but they don't realize that some of those businesses that make it to that have been around for 10 years. They've been making revenue for 8 or 9. They've had R&D budgets for 5 to 7 years. They don't realize that. So our version of a startup, right? Like in the alternative funding world where you're talking about taking on debt in your business, is simply just having a business checking account for 3 months. If you've had a business checking account for 3 months, you can apply for alternative funding that's specific to your business. And that's cash in your hand. Now, the reason that I say cash is because as long as you meet that minimum criteria there, you can apply for cash. Now, if you don't have that, you can still apply for other types of funding. So the equipment financing product, really quick, is a hack to get you money as a startup. If you are a startup and have decent or good or great credit, you can potentially access funding for equipment financing. So if you are a restaurant and you need, ovens and fryers and refrigerators, or even, a pizza place that needs glass casing and tables and chairs, a cash register and POS system. I mean, this is all, business essential equipment. Well, you can finance that as a true startup. They may require a down payment, 10, 20%, something like that. But you can look at it as long as you have decent credit. Outside of that, the SBA also offers some types of startup funding, where if you're buying an existing business, and you have decent credit and that business has good history, you can utilize an SBA to purchase that business, especially if you have experience in that industry. Or let's say you're, it's like one of those things where, a son's purchasing his father's business, right? The dad's retiring out of the business type of thing, or you're buying out a partner. Those are great opportunities too. But, I would say, just like, the biggest thing that we always ask any borrower is what are you doing with the money, right? Because is startup funding available? Yes. But if you're not purchasing equipment, it's going to be tough. If you're even looking for cash in an existing business, what are you doing with the money? Because let's face it, all money's expensive right now, even if you go get a mortgage over 30 years. So, every dollar that you're going to spend these days, you should measure twice and cut once, right?
And so it's kind of like you making sure that they got a plan.
Absolutely. Right. Because if your plan doesn't outweigh the cost, then we don't really want to lend you the money. To be honest, like, if you're somebody that, you flip your inventory every 4 to 6 weeks, right? And on that inventory, you make 50%. Well, if we talk about a 12-month loan, you're flipping your inventory anywhere from, 7.5 to 10 times, whatever that is, to 10 to 12 times in that time frame. You're now making 500-600%, right? Like, over that time. So yes, you borrowed money and that money had a cost, and it might even be expensive, but you still had this substantial growth that was able to take place because you had access to the funding. So that's what we try to do. We try to help business owners understand, do I actually have an opportunity? Am I facing a challenge? Like, what's the need here, right? And as long as that need outweighs the cost, then it makes sense to take the funding. If it doesn't, I would be the first person to tell you, like, measure twice and cut once. Make sure you're you're doing what's right. And listen, sometimes having a relationship with a lender is a great reason to borrow the money, right? The sun might be shining now, but one day it's going to be rainy. Do you want to rely on developing a relationship when it's raining, or do you want them to know, hey, listen, this is just a quick storm passing by, So there's advantage to borrowing money now for sure. But again, want to understand the whole picture and not just make sure that that's why we're borrowing the money, or we're paying off personal credit card debt, or we're throwing our daughter a nice sweet 16, right? Like, like, these are all cool things to do, right? But like, you're borrowing money with a cost. Let's go make the money with it and then solve those challenges with the money you made, right?
Most definitely.
You make more money in your business, you can pay off your credit card debt. You make more money in your business, you could throw that sweet 16, maybe it's a sour 17, Crawl, walk, run. But no, the real understanding has to come down to, what are you using the money for? And then we back you into the best product for that.
Most definitely.
Let me ask a quick question about structure. Yeah. So does it matter if they're an LLC, corporation, or a sole proprietor?
So great question. Honestly, I don't want to say no, because it could matter depending on exactly what their scenario is, but it's really a no, to be honest. Like, that's so far down the list of risk factors. Your industry, your time in business, your credit score, these are all going to outweigh that factor. But the factors that matter the most are, how much money do you make and how much money do you keep? Those are the two things that actually matter, because that's where they're going to understand what you can afford and how much you could potentially pay in payments, right? So, they're never going to leave you with no money, but they want to understand that there is a percent that you're making and a percent that you're keeping, and what is that difference, and how much can you afford? That's what they'll give you.
Tony, how can a business improve their chances of getting funding?
How can a business improve their chances of getting funding? Work with Rock Financial. No, I'm just kidding. As far as improving their chances, I mean, I would say run their business. The more efficiently you run, I'm so glad you asked this question, as a matter of fact, because the real answer here is, don't worry about the funding. Worry about your business. And if your business, you're focused on growing your business, taking advantage of opportunities, solving challenges as they come up, implementing the right people, process, and technology to take advantage of these things when they do present themselves, guess what? Funding will be a part of that. Can you do some things that will hedge your bet? Absolutely. I'll give you some free game right now. The first thing you can do is have a plan, right? Know what you're trying to do, right? If you aim for a target, you got a much better chance of hitting it. But, bring in some resources to help you do that. One of the things that is probably like a best kept secret in terms of free, resources to small businesses is what's called the SBDC, or the Small Business Development Center. They're in pretty much every local community. They're usually at a college in your local area. I know based on what state you're in, there's more of them. And, I'm not going to compare it to, the electoral college, but that's kind of how it works. Based on how many people are in your population, they allocate more funding for more SBDCs. But it's such a well-kept secret that the college that I went to the business school for more time than I'd like to admit, more than 4 years. They had one in the business building that I didn't know about. And I went there every day for, like I said, more than 4 years. And I didn't even know that it existed. Right. So how is that the case? And what do? Well, they provide free business consulting. And the consulting is subsidized by the SBA and the government. So it's a free resource. You go in there, you tell them what you do, what you're trying to do. They have all the demographics and insights and, local market understanding that they can give you all of this information. And then they help build your plan for funding, essentially. They are backed by the SBA. So that's what they do. They teach you how to go out and get money and what's available. And, they kind of help keep your ear to the ground. The second thing that I would point out, and that they're already doing, is continue to invest their time into resources like you guys provide them. Being on and listening to this video right here, being a part of your network, they're getting that free game that we were just talking about. So I would say this group that's listening to this is probably doing some of this stuff already. But run your business, run your race, and allow the resources around you to help you, take advantage of those opportunities when they present themselves. I wouldn't do much more than that. A lot of what the gurus and influencers are talking about right now is go get the funding, go get the funding, go get the funding. They don't understand that, like, business credit doesn't matter if your business sucks. Funding doesn't matter if your business sucks. You won't be able to pay it back. You'll never get it again, and you'll never be able to compound on what you're doing. That's the idea. As a business owner, let's compound this thing like interest, and year over year continue to take advantage of, tax strategies and funding, and, there's a lot of advantage to being a business owner versus being an employee. And I'm not saying there's anything wrong with being an employee, but, you got, tax savings and all these different things that people talk about, and they're great. They don't matter if your business sucks, though.
Right.
Exactly.
You're not going to be able to do it for a long time. You're not going to sustain that. You might get, one round of funding, and, $50,000 might sound like a lot, but in business, it's really not. Like, you think about $50,000 over the next 12 months, that's under $5,000 a month. And to a business, that's not that much money. If you have to pay an employee, that's hopefully more than their salary today, because it's expensive to live in this country. So again, run your business. That's the best piece of advice.
I totally agree with you, Tony. Marvin and I have a restaurant in Atlanta, And we understand exactly what you're saying. $50,000 is not a lot of money. And a lot of times, we don't focus on running that business. You run that business and you put you get some things put in place that are great, then you can most definitely be eligible for that funding. So I agree with you 100%.
Absolutely. And you got a better chance of getting funding when you apply as a better business. Like, I'm not saying that you can't get funding right now, regardless of what your scenario is. I'll be the first person to tell you there's more options available than there's ever been. But knowing that it's the right time to take those options, taking advantage of the right option when it is the right time, those are the things that the savvy business owners do.
And I was just wondering, how long does it take to actually get that money in hand? When you start the process, how long does it take to get funding? So if I came to you today and said, "Hey, Tony, I would like to get some funding for my restaurant, Marvin and I," how long will it take in order to get that process going?
The first question you're going to hear us ask is, how quickly do you need it? Not to put it back on you, but we always say we have the ability to move as quickly as our borrowers. Typically, just so you have like a good understanding, typically we see initial approval in anywhere between 12 and 24 hours. So like usually one to 2 days at the absolute most. And then once you have an initial approval, the average closing time is typically like 3 to 5 business days. Now, the reason that I say, hey, how quickly did you need that funding, is because let's face it, you guys own a restaurant, right? If your fridge goes out right now, we're on a clock, before
Right.
all that food spoils, before we're not able to serve that, right? So I don't know if, we'd be able to get your money today, but certainly tomorrow, especially if you're on it and need it and can get us what we need quickly. If you work with us efficiently, we can move as quickly as same day. That's for sure. There's, some really cool technology, and they call it the fintech industry, financial technology, that's kind of leaked into this type of lending. And because of that, you have online applications, a quick little online checkout where you DocuSign a loan agreement and the money's in your account. It's wired, so it happens pretty instantaneously. We could be talking about just a couple hours from application to money in your account.
Wow.
That's best case scenario. It doesn't always work that way, but if you need it to, that's what we're going to apply for, and that's what you can expect.
So, Tony, we live in Puerto Rico part-time. So do you also lend in American territories?
Great question. And what an awesome thing. First of all, I'm jealous. That's for sure. Talked a little bit about this with my wife, not to go too far into the personal thing, but I was like, listen, New York's expensive these days. Like, we got a nice house we bought recently. We bought a house a year ago, and I'm like, I love what we got going on. Don't get me wrong. But if this thing blows up, can we go to Puerto Rico? Like, that was our conversation. So
Wow.
I think you guys understand it.
Yeah.
But Puerto Rico specifically, yes. Some other American territories, you really have to have a U.S. business checking account. As long as it's a U.S.-based bank, we can typically help. But it really comes down to that bank account, because our lenders have to be able to deposit and pull the money. That's really what it comes down to.
Got it. So let me ask, because we know a lot of businesses in Puerto Rico. So we do have an American bank account and we got a Puerto Rican bank account. So are you specifically looking at the income in the U.S. account or the income in the Puerto Rican account?
It would be the income in that U.S. account. We might be able to account for the Puerto Rico account depending on the nature of your business, but it's going to be that U.S. account mostly.
Let me say this. Puerto Rico is a little bit different because they don't have it where you can log in like a fintech login. Yep. It doesn't connect. And also, Puerto Rico doesn't do Zelle. Their banking system, Tony, is so different. Just for us to get a business bank account, we had to sign documents and fill out paperwork as if we were getting a mortgage. That's how serious it is in Puerto Rico. I'm just like, oh my God.
No, it's different, right? And that speaks to the banking industry as a whole. Even if you apply for a line of credit or a loan at the bank right now for your business, you're going to feel the same way in the U.S. that you did in Puerto Rico. It's, they want every piece of document that you could possibly provide. They want to tie every asset you can to that type of product. It's the way that traditional banks and lenders think. They don't they're more worried about that deposit account. That's what they do. They want to keep and hold your money. They don't necessarily want to lend you money. They don't want to, they don't want to have to go down that road. They will do it, and that's why they do it, is because they know they'll get to house the money then. But it's definitely different, and that's why you hit the nail on the head with, you can't connect the bank. It's not the same. That's what makes it difficult. So as long as you have a U.S. checking account, we can work with you in Puerto Rico.
And so I wanted to ask the question, what businesses do you consider high risk?
This is a good one. This is a floating target. And what I mean by that is, if we ask this question 6 months from now, I mean, realistically, if we ask any of these questions 6 months from now, my answer is going to change. And that's part of being a good broker. Our banks and lenders change what they do every single day. They don't tell us. They give you guidelines at the beginning of your relationship, and they'll always operate within those guidelines, right? What I mean by that is they'll tell you they do loans from, loans up to $5 million. But in the last 6 months, they might not have issued an approval over $500,000, right? And that doesn't mean that they won't go to $5 million. It just means right now they're not, right? So that's what's difficult to really understand about this industry, is you're shooting at a moving target. So we do a really good job of, because we see so much volume, understanding the numbers. What banks and lenders do, what do they like? What are their real core industries? What are the ones that are kind of on the cusp? I would tell you the two biggest industries that come to mind right now that people are talking about being more on the high risk side are transportation and construction. And I would tell you the same thing. What I mean by that is they've seen the biggest change in their terms over the last 6 to 12, even 18 months. And I would also give you the information that those are the two best performing industries for us over the last 6 to 12 to 18 months. And why I say that is because we are a broker, right? You go talk to a lender, that's going to be their answer. They're going to tell you construction, they're going to tell you transportation, but that's because they're seeing so many of those deals, they're going to cherry pick the ones that they like, and that's really all that they're going to do. For us, we work with lenders that specialize in those industries or have specific products for those types of businesses. We're asking questions like, are you long haul or short haul when it comes to transportation? Are you hot shot? Depending on what you got going on, right? Are you a towing company, right? I'll throw you a curveball. What if you're medical transportation, right? Like, are you in the trucking transportation? Because if I ask you to picture a truck driver, you got one picture. If I ask you to picture a doctor, it's totally different, right? So how does all this work? Well, that's where we come in. We do a really good job of giving everybody a seat and really, like I said before, telling your story to the lenders and then telling you that lender information so you can make smart decisions.
Right. That's really, really important. And that's the wonderful thing about working with Rock Financial, is that you're opening up the door, because a lot of times customers just don't know. They don't know how to tell their story to the bank. They don't know how to paint the picture. So they can miss out on quite a bit of money because they don't understand how to paint the picture.
Oh, it's so true. I mean, one of the things that I definitely wanted to make sure I mentioned was, if you do decide to work with us, be prepared to answer some questions and probably answer a lot of questions, because we want the whole story. The more detail you give us, the more insight, the more we understand where your business is coming from, where it's at, and where you want to go, the better we can deliver on that. Like I said, there's a lender out there for you, and they have a product, but finding that is what becomes most difficult, right? As a business owner, how much time, energy, and effort do you want to dedicate to your funding? Because you can go apply at a lender. It typically takes us, anywhere from, and we got a lot of technology that does this for us, but it typically takes us 20 minutes just to apply at each lender that will apply for you for, right? And that's us knowing exact documentation, exact fields that need to be shared, right? Like we know every single one. And typically you can apply with anywhere from like 3 to 7 lenders at a time, right? So you're talking about how much time do you have to do that over and over again? How much time is it going to take a business owner to go find those people that are doing those things? And how do you know they're the right ones? The one thing I can tell you is every lender believes they have the right product for you. And I'm not
Right.
trying to shoot down lenders. We have great relationships with all of them. But the one thing that we talk about is, what are they actually doing and what do they actually want to do? Because we understand that in their seat, they have a certain risk appetite, right? So they don't want to service everything, but if something comes across their plate, they gave it an option, they're gonna try to sell that. And there's nothing wrong with that, but that doesn't mean that they don't have a competitor out there that's cheaper, longer term, and higher, higher money. And that's also not saying that it's not that, right? Like, or that it is that, right? But at least when you do have somebody like us that can do the shopping for you. And what's really cool about it is, not to go too deep into the process, but if you are a business owner who does apply with us, you don't have to look at all these different options from all these different lenders. No, the way that it works is we have this really cool calculator feature. It's a piece of technology that we built out that when you apply with us and you get approved, you get this calculator sent to you. And basically you go in and you can play with the terms, and that'll change the rates and how much money you have access to. And you go in and based on how much money you select and what term you have, it'll tell you what your rate is, your payment is, and it just breaks the whole thing down for you. So again, it's not, hey, does this work? Yes or no. It's how much do you need? And does that make sense? Right? We've seen people take, half of their approval. We've seen people take 100%, and everything in between. It really is a cool feature that we didn't know what we were getting when we were rolling it out. We just knew that we needed an efficient way for our borrowers to be able to look at all this information, right?
So the borrower can actually decide if they want the whole loan or half the loan. I heard you just say that. That's a great point.
Yeah. So it's not always that case, right? If it's one option, right? Like that's the only time it would be this. But yeah, a lot of times, lenders will let you take less money. They might shorten the term a little bit, right? And that might change things, but that's where that calculator kind of comes in. Based on how much money you choose, you're going to see the rate and terms that are associated with exactly that option.
Okay, so top of mind, what's the smallest loan you've ever seen? And then what's the largest loan?
Great questions. I'll say this: we do lending from $5,000 to $5 million. But I've also seen us lend as little as $3,000 on the smallest loans. And I've also seen us do deals 10, 15, $20 million plus. That stuff is usually more like commercial real estate related or asset based, or like I said, we were talking about those big deals before, businesses that are established, been around, they have the financials that support a loan of that size. They also have the opportunity, right? So, those are the things that it really comes down to is, what are you using the money for and what can you afford?
And so I got a quick question about real estate. You brought up a good point. So do you do fix and flip, brand new investors or experienced investors? Can you speak to that a little bit?
So yes and no, we can work with new investors. We typically like to see at least 2 flips within the last 24 months. As long as you can prove that you've done that, then there's a ton of options. If you are brand new to this, there are some things that we might be able to do, especially if you're somebody that's in the construction industry looking to flip their first property or something like that. It also depends on credit, what some of these products are available to you. That's the one thing about real estate is it's a little bit more personally driven. So the better your credit, the more options you have. That's kind of the nature of the beast with that. If you have credit that's poor, there's really only a handful of options, and you got to have a little bit of experience.
Amazing. We're going to make sure that we have your link listed below, guys, so that if you're interested in getting financing from Rock Financial, if you want to know a little bit more, you can reach out to Tony. He's willing to help you, put you on the map. Guys, you need to look at getting the money. That's what it's about, getting yourself in position. So, and having the resources, knowing where to go, knowing who can help you. Those things are so important in this day and age.
Absolutely. Again, thank you guys for having me on. And, you know, if you are looking for funding now or in the future, click that link, because, you know, as long as we know you came through this channel, we know you got it going on. So let's rock, as we say. And thanks again, guys, so much for having me on.
Thank you.
All right.
Tony.
Thank you, Tony. It's been great, man. I appreciate it.
Thanks,
Most
guys.
definitely.